Good morning, traders. I wanted to show you a couple new developments on the Bitcoin chart. Nothing really super significant, but a couple things that are interesting. At least I find them interesting. And anytime you can find new variables or indicators to add to your list of variables in an equation, it's only can prove more helpful as you weigh, the odds of more bearish or bullish price action. And what I like to do is I like to take all of my variables, take out my, just for sake of illustration, 8.5 by 11 sheet of paper, draw a line down the middle, and put all my negative indicators, variables on one side, all my positives on the other, and then I add that in the preponderance of, or the weight of the sum total of those variables and indicators will help lead you in the direction of predicting future price action. In this case, one of the things that I like to say, and I've heard many people say, is the trend is your friend, and the bears are definitely, uh, showing their strength since the beginning of November till now. The bears have been in complete control, and I don't see any signs that that has changed yet. A couple new things that are interesting, though, is we have conquered this 37,550 level here today. That's pretty strong resistance area. Along with that, in coincidence with that, we have jumped over this downtrending line of resistance on our RSI. Uh, doesn't necessarily indicate that anything is changing, but I do find it interesting that the bulls have had enough strength to get us over those two lines of previous resistance. Of course, everything is hinging upon the dollar at this point, so we're waiting until the market open on Monday to see if more selling resumes. If it continues, I expect it will. And let's just cover that real quickly, then we'll jump over to what I'm seeing in the charts today. The dollar continues its strengthening move, its bullish trend upward. Of course, right now we're taking a little bit of a rest, and this looks to be a bull flag. As the bulls take a rest here, could maybe even last all of next week before we continue to see that dollar strengthen. Of course, when the dollar strengthens, it has a deflationary impact upon the dollar, and so that previous inflationary price that was being factored into the market and the indexes has to now be extracted or taken out. And because of that, we're seeing an inverse correlation of the dollar to the broader markets and other indexes. So we can see here, and I've talked about this for some time, the Dow has jumped down below this channel, which we lived inside of since the beginning of the pandemic in March or April of 2020, and we have broken down, and now it looks like we are forming a bear flag, and it looks like further bearish action will reside or resume in the market, continuing into next week. And now I am currently uh, under the conclusion that this bearish price action in the markets may continue all the way through mid-February. At least that's the data that's what the data is pointing me to. Regardless, these channels all exist on the other indexes. S&P is no different. Again, bear flag right there. NASDAQ is no different. Underside of the channel, another bear flag there. QQQ, I don't need to repeat myself. And corresponding with this is a bull flag on the VIX. Now, right now, a lot of fear has been generated or consumed in the market regarding, Jay Powell and his threats to increase the interest rates. And I say threats because it hasn't happened yet, right? So until it actually happens, it's just talk, and talk is just a threat. All right. And then we have the situation in Ukraine. Of course, we all know about our COVID variants, new variants coming out. It all depends on what the media chooses to focus their energy and attention on into the coming weeks. But I do believe that they could focus on issues that generate enough fear to spike this index even further. And of course, the spiking fear index only has an inverse relationship with the broader markets. So as this fear is driven upwards, the markets are driven downwards. All right. And we are tightly in the crypto space correlated with price action on the broader markets. And so we see all of these bear flags on Ethereum. I think Ethereum could come all the way down to this area. That looks to be a bear flag forming. Total market cap, same thing. We have a head and shoulders pattern. This is very similar to Bitcoin, of course, because Bitcoin is factored into this price. And we have this ascending trend line that comes all the way back from, I believe, September of 19. We're currently resting on this right now as we continue to form this bearish flag, which could take us all the way down to 1.25 or 26 trillion market cap. All right, so we got a ways to go. Really, we're about halfway there. And Bitcoin dominance is kind of in a bull flag formation right now, hit our heads on that 200-day. I do believe we will continue up. Bitcoin will find some resistance here, may break through that. If it breaks through that, we go all the way to 47% essentially. So Bitcoin will only get stronger. That doesn't mean the price of Bitcoin moves up. That just means if the price is in a downward trend and dominance is spiking, altcoins are actually going down faster at a much higher rate of descent than Bitcoin actually is. So those of us who like to invest in the more risky altcoin space, we have to be cognizant of this, right? We have to be pay attention to this, and this is the time when a lot of people who are in the altcoin space, kind of like gold, which has a defense against deflationary aspect of the dollar. People might move their altcoins more over to a either stable coins or something big like Bitcoin, because the downside impact of that is much less severe than being in the altcoin space. All right, now jumping over to Bitcoin, I want to show you a couple things that I have just found or discovered today. First of all, see this area here when we broke the neckline on our head and shoulders pattern? That's where I'm going to start with this Fibonacci. I'm going to draw a Fibonacci from this area, get my fib out, all the way down to our target down. And you will note something interesting takes place. It's hard to see right here at this zoom level. Let me see if I can zoom in just a bit. And you can see how impactful and how significant each of these price areas were. First of all, at 7.786, you can see right here in this area, we stayed above that for at least a week and a half. And then when we broke below, we broke severely to the downside. We came all the way to this 50% retracement level. The market likes to do that on big moves. Whether up or down doesn't matter. Once you get to that 50% retracement level on Fib, the market does like to take a bit of a pause there. And we see that we hit that almost precisely, bounce back above our support at 35,352, as well as this ascending black trend line. We could never confirm any move, any sort of move below that. And the market right now is taking a pause. And we have a run into this 0.618 level of Fibonacci. I'm not sure if we're exactly above that or exactly below that. Looks like we're sitting exactly right on top of that at the moment. And that is significant as well, because it only further indicates downside potential. All right, now I do want to jump over to a cleaner chart as well, because I want to show you something here I noticed of interest. All right, so see this big candle. What I've done here is I've taken a drawing of Fibonacci once again from the wick high of that big drop to the wick low. And you can see that once we hit support, which was below that wick low at 35,134, we bounced up and we are now ascending. A lot of times when you see these big moves, again, the market likes to retrace back into the 0.618 area, which we did on the 26th of January. And it also likes to retrace into the 50% area. Right on point today. We hit precisely that 50% retracement. Is that significant? I think it may be. I think it's at the very least something to consider, and something that's telling us that this move downward could resume on Monday. Of course, we're all waiting to see what happens on Monday in the broader markets. Jumping back to our Bitcoin chart, that is my line in the sand. Once we cross this and confirm, I'm going to have to make some serious decisions. Do I move all of my position into stable coins, and then would I wait and re-enter down here in this area, maximizing my token gains, or would I just hold and wait for us to get through this period before we continue upwards? That's a decision I'm going to make, and I probably won't make the decision right away. I want to see how rapidly we begin to move, because I do believe that the bears are very close to running out of steam. And I have said that in the past, but if we start to move pretty rapidly, I might just quickly exit, wait for capitulation, and then re-enter when I think we have reached those targets, or near those targets at the very least. All right, that's all I wanted to point out today. I will catch you guys on the next video. Until then, peace. Where's my